Hey guys, this is Max Convexity. I appreciate you guys being here. Let's look at some of the trades for the Defiance and some of the more frequently traded yield max funds. All right, so right here, triple QI. Right now, they're losing $54,000 at this point in the morning. They sold the 19,750 strike for $101. Let's look at that up here graphically. Well, they're down a little bit more. My spreadsheet is 15 minutes behind. So actually, they're down quite a bit right now, unfortunately. This is just showing them down 54,000, but they're actually down quite a bit more than that. What's the current price? We can kind of see 19,587. All right, so let me change that. 19,587. Current losses around $800,000. All right, so JEPY, let's see what's going on with them. They sold the 54.75 strike for $17.75. Right now, it's showing this position 14 points in the money, but they sold the option for 17 points, so that still leaves a little bit of profit. But I bet if we look up here at the chart, it's not a real profit because it's probably under the break-even line. Well, no, it's actually still on top a little bit. Okay, so that chart was caught up, but the triple QY one was trading behind. Let's see how IWMY is doing. So small profit in JEPY, loss in triple QY right now. And IWMY trades the Russell, and we would expect a full loss because it's under, or not a full loss, but a loss of some type because it's under the break-even line there. So we'll look at the spreadsheet. I'm sorry, the spreadsheet sucks so bad. It is just ugly. I'm gonna have to scrap the 5-minute max spreadsheet. It just, even though it's pretty, it just made too much work for me. I just don't understand why my spreadsheets have to suck so bad. I mean, I just don't understand why it doesn't look like Corey's. I don't understand it. And mainly the thing is it doesn't work. Mine just quit working. I can't maintain it. Corey can make it for me and make it work for a while, but then all the references will break. I don't have hours a day to maintain it. So I wish I did. Anyway, all right. So on IWMY, they sold 769 contracts at the 2055 level for 1522 right now. So this is a little bit behind because this is showing them still with the profit. See, the colors quit showing up on here. I don't know why this doesn't work for me. I don't get it. Format. Conditional formatting. I mean, I don't understand why my spreadsheets have to suck so bad. I just don't get it. All right. Well, so this is still showing a profit here. So, oh gosh. So this obviously isn't the right price. Let's see what IWMY is really trading at, or see what Russell's really trading at. Last price was 2033 is close enough. So when we put that in there, we'll get a, yeah, okay. So right now we're down about $500,000. Okay. So let's look at some other, I want to look at triple QT and SPYT right now. I modeled their trades out so you guys don't have to look at those ugly freaking spreadsheets. I just modeled QQQT's trade and SPYT's trade out in option strat. All right. All right. So, I believe SPYT has 60 contracts. Yes, and QQQT has 3 contracts. But in any event, there's the profit and loss graph for the SPYT spread. They sold the 54.70 Friday night right before the close. They got 17 bucks for it. And then they bought an option 15 points away higher to cap their potential loss for 9 points. So the difference is what they can make. They can make the difference between 17 and 9, 8 points. Now, if the market goes up, you notice they get to a full loss if the market goes up 0.3% and the S&P goes above 54.85. It's a $42,000 loss. Well, this fund also owns shares in the SPY or the IVV. In fact, that's what most of their assets are. 99% of their assets is shares in the SPY or IVV. So even though it's bad for their spread and they lose 42,000 on their spread, remember they have 6,000 shares. I know it says 60 contracts. Each contract represents 100 shares, right? So they have 6,000 shares of the SPY or the IVV that went up 0.5% or 0.3%. So it offsets all of that loss. But this is how the overlay works. And so this one's been around for a while. SPYT's been around for a couple of months. These are target funds. They only pay 20%. I say only. If they didn't have the way Jay did this is if they didn't have this second option, if I excluded that second option and it wasn't a spread anymore, that's how a normal covered call fund works. So then if the market goes up, the covered call fund loses exactly as much as the market makes. So that's capped on the upside. That's what's called a total overwrite. If you just sell a call or a put, and in the money put or an out of the money call, you just sell it naked. You don't do the spread. You have the effect of totally capping your upside over the call strike price. Once you put this spread on, you're no longer totally capped. The trade-off is you don't make as much income. They only made 48,000, whereas if they just sold the call naked, they would have made 102,000. So trade-offs, of course. Now let's look over here at QT. They just started. So they just have 3 contracts, which would okay, they have 3 contracts, but actually S&P contracts are bigger. One S&P contract equals 1,000 SPY shares. So they have 3,000 SPY shares, the equivalent of 3,000 SPY or 3,000 IVB shares. SPYT has 60,000 SPY or IVV shares. Okay, well anyway, QTT, it's the same thing. They sell one option. They got $66 for this one. They bought an option higher than it to cap the loss. It's called a spread. So they're selling the spread. The reason they're selling the spread is the reason you would say selling the spread is because the leg that you were short was worth more, $66. You got more for the leg you were short than you spent on the one you were long. So this one has a net of about $2,000 available and that's per contract. And they did 3 contracts. So if the market goes nowhere or goes down, this fund makes an extra $6,000. The market goes up, this overlay loses money, but the fund's glad because their SPY and IVV shares went up. So the fund is still up, even though there was a slight opportunity loss. I got a question from Tom McGee, and he was saying, because I was calling these QQQT and SPYT partial overwrites, and he said, hey, Max, they're full overwrites. And what Tom was referring to is they sell the equivalent number. Here, let's look. Well, I'll show you guys this. I think, Tom, I think I just didn't explain it right. And I answered the letter to Tom, but I thought I would explain it I answered in the comment to Tom, but I thought I would explain it to the rest of you guys in case somebody else thought that too. So we'll look at SPYT because it's been around longer. Okay, so they have IVV, same thing as SPY, same underlines, and 101% of their assets, basically all their money's in IVV. So if you buy this fund, it's basically the same thing with the small difference. Basically the same thing as going out and buying IVV because all they do is they buy IVV. It's like buying IVV, but getting a higher expense charge because they buy IVV, then they charge you 1%. But they also sell these daily options on top of it. Okay, so see how that says 61,000 shares? Okay, well, this says 60 contracts. In theory, they could have written 61 contracts. That would be a full override. And that's what Tom was referring to. Tom's saying, well, they write all the options that are available for them to write. And that's correct. That is correct. When I was calling it a partial override, I was referring to the fact that it's a spread and the spread uncaps it. Let me show it a different way. Let me try to explain it this way. I think this might explain it better. Okay. So if it's just a normal covered call fund, we're just going to exclude the spread. Okay. And we're going to see how many deltas this is. All right. This is 47 deltas right now. So normal covered call fund would earn all those 47 deltas. That's what they would try to earn. In fact, normal covered call funds usually sell, like JP Morgan sells the 30 delta. The 30 delta is out of the money. This one probably was the 30 delta at the time they sold it, but the market's probably moving or something. But you can tell by looking at your deltas what your exposure is to the underlying. So as soon as they add this one back in, so that one's 47 deltas. This one they're selling. So this one you have to take off 24 deltas. So they're only receiving 20 deltas. Okay. So whereas a full overwrite receives 40 deltas. Okay. So the deltas are what pay the extrinsics, what pays the option income. Because remember the JEPY that does the full overwrite, they pay about 40%, which is about twice 20. This target fund that does this partial override pays half of that, pays 20%. They set 20 as their target. They could set a higher target or a smaller target. They could just vary the lengths, the width between the width of their spread. And they could also vary where they put the spread, but they put the spread wherever they need to make 20%, I believe is the way they do that. But anyway, this is a really interesting, it's a really interesting idea. And I love the QQQT concept and the SPYT concept. I heard somebody call another influencer calling SPYT SPYT this weekend. And I didn't really like that. Just like I don't like when people call PayPay PP. Because PayPay is a good fund. It's not PP. You could call Tesla PP. It'd be funny to call Tesla PP or OARC, but anyway. All right. So I think, SPIT, I guess you could call it SPIT. Maybe he doesn't like it as much as I do, but SPYT, I think SPYT sounds cooler. All right. So let's look at these Yield Max funds, and then I'll let you guys get out of here and get on with your day. I have some Yield Max strike prices here. Let's start with the ones that the other guys don't cover. I'm going to start with Amazon. I'm starting to cover, and I started last week, Amazon and AMD, because they're good funds, and I'm just going to put the strike prices on there so we can kind of visually see when they're blowing out like they did last week and how much room they have. Now they have plenty of upside appreciation to the strike price this week. They sold I believe it was the 207.50. But anyway, they just have one strike. Now I'll keep an eye on this every day, and as they add other ones or roll or whatever, we'll cover it. I might even start estimating the dividend. Now AMD, I can estimate the dividend anyway, but I might actually really keep track of the extrinsic capture on AMD and AMZY. But as of yet, I haven't. But they don't go X till this week. So if I do that, I'll start in the next time period. We'll start keeping track of the next pay period, as Happy Camper with dividends would say. But we'll start doing that next pay period. But for now, these guys have a 2-strike ladder. They sold the 165s, the 162.50s. So they're in good shape. They just need the stock to turn around. Let's go over here and check out Tesla. Look at Tesla. Oh my gosh. See, I bet people who put on the sandwich are pissed. So, the thing is, hedging is a great idea and everything, but you give up upside. So you have to be aware of that. But right about when Crash came out, this thing started rallying. So Crash came out right here. The market was at 177. That was May 8th. Here we are, June 1st or July 1st. I'm sorry. And speaking of that, I have to give Jax his heartworm pill. He takes his heartworm pills on the first of every month. So I need to remember to give that to him. All right. So anyway, so there's Tesla. Well, Tesla's already blown out their one strike. They have, yeah, I guess they just do have one strike. Anyway, all right. Well, that ought to be interesting. Listening to Retire on Dividends talk about it, if nothing else. We'll see what it's early in the week. Maybe they'll, who knows? It'd be interesting to see what they do here. Okay, now Misty has two strikes. They're way out of the money. I think it's a 1545 and the 1540. I think they had the 15 or so. They had really close strikes together. It's hard to even see them. But anyway, you get the idea. Plenty of room on the upside for upside appreciation. Now we'll look at NVIDIA. NVIDIA has a 4-strike ladder and plenty of room for appreciation. And finally, we'll look at old Mr. Misty, whatever. All right, same thing. A ladder, plenty of room for appreciation. Oh, yeah, I forgot. We looked at Mr. twice. My bad. Look at Coinbase. I'm about as sharp as Joe Biden this morning, right? All right. No, that was sad. I'm not making fun of him. But I do the same things. I do similar things. As far as the rambling on and on, for sure. I think that's an old person thing, but all right. Now, Coinbase is looking pretty good. They've got one of their strikes blown out, but they still have a little room for upside appreciation. We'll definitely keep an eye on that one. Okay, so now let's look at just the market generally and see what's going on. Let's see what's moving today. GameStop is down, so the meme stocks are down. Oh, we didn't look at US. Oh, gosh darn it. Okay, so Defiance has a fund that I sometimes forget to cover. It's a great fund called USOY. It trades USO options. And I believe they sold the 80. They did. They sold the 80. So I can't believe they weren't selling in the money strike. Okay, well, let's look real quick. I thought I did this last night, but it was getting late. Let's see what they do, which option they did sell, and I'll fix it right now. And they sold a couple of them. They have the 81s and the 80s. Okay. Same date, 81s and 80s. Okay. Well, they're laddering it out a little bit. They have 1.8 million shares. Or nah, that's not right. Yeah, they don't have any underlying because they sell the put. The put's already underlying. All right, so 80s and 81s. Well, all right, so we just go out. These expire at the end of the day, so we'll just go right there. There's the 80s. And here is the 81s. Sorry, I didn't have that one ready for you. All right, so there's their ladder. They still have a little bit of room on the upside. So you can see they've just been selling one option at a time, but they've gone to selling two. So that's nice. All right, so what else do we need to look at? I don't know if I mentioned the crash position. When Tesla's rallying, Crash is rolling the puts up behind it. All right. Gosh darn it. Look at this thing. And I'm not saying that people would be dumb to do the sandwich, but you just have to realize as soon as you do it, you're giving up upside. And it just so happens that in the time period that this has come out, it's gone from 177 to 211. If crash had come out the month before, it'd been the greatest idea ever. Not that this isn't a good idea. You have to remember, yeah, you're giving up upside. These things don't get a lot of upside, and you're trading that upside that they don't get a lot of anyway for a little dividend. And it paid a pretty good dividend last time. So, and it's going to pay another one this time. I don't know how much, but you can see they're just rolling these strikes up behind as the market goes up. The red profit boxes are the crash strikes. Crash, just for people that do not know, it's an inverse covered call fund. So it's a covered put fund. They short stock and they sell puts against short stock. It's the opposite trade of being long stock and selling calls against long stock. There's Jackson. Come on, Jackson. All right. Well, I appreciate you guys being here. Once you guys get out of here, I'm going to go do some other stuff. Just trying to see what else is moving. It looks like Tesla's it. Tesla and VIX. That's not a good sign. When VIX is moving up, traditionally it's a bad sign for the market, is why I said that. It's an inverse indicator. We also have Coinbase up. We also have VIVIX up, which is VIX of VIX. So yeah, not good news. Maybe some cracks are developing under the market. Maybe this rally is getting a little bit old that we've been having for this face ripper. So let's look at this real quick. Then I'll for sure let you guys go. Jackson, you get your heartworm pill today. Okay. He thinks it's a treat, so he likes it. Simparica. I think it's Simparica or something. It's also for fleas and maybe kennel cough or something. Yeah, but now that is the face ripper of all face rippers. This is one of the rally. I'll remember this rally the rest of my life, just like I'll remember the rally in 99 the rest of my life, or the rally in late 2020 the rest of my life. This has just been epic. Absolutely epic. Yeah, it's getting a little long in the tooth. Our politics are a shit show. Maybe something will happen in October or November. I'll make some content on it, but you can tell by looking at the VIX curve that traders are expecting something possibly bad to happen, or just not bad, something volatile to happen. Volatility doesn't give you a qualitative judgment, really. So it gives you a quantitative judgment. Something's going to happen. All right, guys, I'll be back later. You guys have a great day.